Preparing for a fund accounting, custody, and asset servicing at BNY Mellon interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each one, you'll see what the interviewer is testing, the core concepts you should cover, and a sample answer. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Walk me through the daily NAV process for a mutual fund or institutional fund. The interviewer wants to assess your practical understanding of fund accounting workflow, NAV calculation steps, dependency on custody data, pricing inputs, reconciliation, review controls, and deadline management in a daily production environment. While answering, focus on portfolio holdings, trade booking, income and expense accruals, security pricing, cash and position reconciliations, exception resolution, tolerance checks, review sign-off, and timely NAV release. Daily NAV is the control process that converts portfolio activity into an accurate per-share value. I start with prior day holdings, book trades, cash, income, expenses, FX, and corporate actions. Then price securities and reconcile positions and cash to custodian and broker records. Exceptions are investigated before sign-off. The final NAV is reviewed against tolerances and delivered on deadline because investors, transfer agents, and clients rely on it for subscriptions, redemptions, and reporting. Question 2. What is the role of a custodian bank like BNY Mellon in the investment lifecycle? The interviewer is testing your understanding of custody services, safekeeping of assets, settlement support, income collection, corporate action processing, reporting, and how global custodians support asset managers and institutional investors. Make sure to cover asset safekeeping, trade settlement, cash management, income and tax processing, corporate actions, reconciliations, reporting, asset servicing, and the difference between custody and investment decision-making. A custodian protects and services client assets. It does not decide what to buy or sell. In practice, BNY Mellon supports trade settlement, safekeeps securities, collects income, processes corporate actions, manages cash movements, handles tax documentation, and provides records to fund accountants and clients. The value is operational reliability. If custody records are accurate and timely, downstream NAV, performance reporting, compliance monitoring, and investor statements become much more dependable. Question 3. How would you investigate a cash reconciliation break between the fund accounting system and the custodian? This question evaluates your problem-solving approach, attention to detail, understanding of reconciliation breaks, trade settlement timing, bank activity, corporate actions, fees, FX movements, and escalation discipline. In your answer, talk about comparing ledger and custody activity, identifying timing versus true breaks, reviewing trades, income, expenses, FX, wire movements, corporate actions, aging items, documentation, and escalation. I would first isolate the currency, account amount, and effective date of the break. Then I would compare accounting ledger activity against custodian cash activity, trades, settlement dates, dividends, interest, fees, FX, transfers, and corporate actions. If it is a timing item, I document and monitor it. If it is a true error, I identify ownership, correct the accounting entry, or request custodian action, and escalate aged or material breaks before NAV sign-off. Question 4. What is the difference between trade date accounting and settlement date accounting? The interviewer wants to assess your grasp of transaction recognition, fund valuation impact, custody settlement flow, receivables and payables, and how accounting methodology affects holdings, cash, and NAV reporting. Be sure to mention recognition timing, bought and sold securities, receivables and payables, cash impacted settlement, common fund accounting practice, and why consistency matters for NAV accuracy. Trade date accounting records the investment transaction when the trade is executed. while settlement date accounting records it when cash and securities actually exchange. Most investment funds use trade date accounting because NAV should reflect the portfolio manager's economic exposure immediately. Cash may not move until T+1 or T+2, so the accounting records receivables or payables until settlement. This approach keeps holdings, market exposure, and performance aligned with the investment decision. Question 5. How do corporate actions affect fund accounting and custody records? The interviewer is testing your understanding of asset servicing events, including dividends, splits, mergers, tenders, rights issues, elections, entitlements, custody notifications, accounting entries, and operational risk controls. While answering, focus on mandatory versus voluntary events, entitlement calculation, ex-date and payable date, position adjustments, cash or security proceeds, reconciliation, client elections, and NAV impact. Corporate actions can change cash, positions, cost, income, and valuation, so they matter directly to NAV. A cash dividend creates income and receivable entries. A stock split changes share quantity and price. A merger may replace one security with another plus cash. For voluntary events, elections and deadlines are critical. I would verify custodian notifications, calculate entitlements, book accounting entries, reconcile results, and make sure the event is reflected correctly before NAV release. Question 6. Explain how dividend and interest income are recognized in fund accounting. This question evaluates your knowledge of investment income recognition, accrual accounting, ex-date treatment, coupon accruals, receivables, withholding tax, amortization, and the impact of income on NAV and distributions. Make sure to cover dividend ex-date recognition, interest accrual over time, receivables until payment, withholding taxes, income validation against custodian records, and how errors affect NAV. Equity dividends are usually recognized on ex-date because that is when the fund earns the economic right to receive the dividend. Fixed income interest is accrued daily based on coupon terms, day count convention, and holdings. Until cash is received, the fund records a receivable. I would also consider withholding tax, reclaim eligibility, and amortization for bonds. Accurate income recognition is important because it affects NAV, yield reporting, and investor distributions. Question 7. What controls would you perform before releasing a NAV to the client? The interviewer wants to assess your control mindset, understanding of maker-checker processes, reasonableness reviews, tolerance checks, exception management, materiality, documentation, and client service standards in fund operations. In your answer, talk about price variance checks, cash and position reconciliations, income validation, expense review, corporate action checks, NAV movement analysis, share activity, sign-off workflow, and escalation. Before releasing NAV, I would complete core reconciliations, confirm material breaks are cleared or explained, and run price, income, expense, and NAV movement checks. I would compare today's NAV change to market movement and portfolio exposure. I would also review corporate actions, capital stock activity, stale prices, and unusual cash movements. The final step is documented maker-checker sign-off. At a firm like BNY Mellon, accuracy matters, but so does meeting agreed client deadlines. Question 8. How would you handle a material pricing exception discovered close to NAV deadline? This question evaluates your judgment under time pressure, ability to prioritize material issues, knowledge of pricing hierarchy, escalation protocols, client communication, valuation controls, and operational risk management. Be sure to mention materiality assessment, independent price verification, approved pricing sources, stale or missing prices, escalation to supervisor or valuation team, documentation, and deadline-aware communication. I would not ignore a material pricing exception just to meet the deadline. First, I would quantify the NAV impact and confirm whether the price differs from approved tolerance. Then I would check independent sources, prior price movement, market data, and any corporate action or security identifier issue. If unresolved, I would escalate immediately to the supervisor, pricing team, or valuation committee process. The key is documenting the decision and communicating deadline risk early. Question 9. What is the difference between realized gain-loss and unrealized gain-loss? The interviewer is testing your understanding of investment accounting fundamentals, cost basis, market value changes, sale transactions, performance reporting, financial statement presentation, and NAV impact. While answering, focus on realized gains from sold positions, unrealized gains from holdings still owned, cost basis versus market value, trade impact, and how both affect fund performance. Unrealized gain or loss is the change in value of a position the fund still owns. If a stock cost $100,000 and is worth $112,000 today, the fund has a $12,000 unrealized gain. Realized gain or loss occurs when the fund sells the position, comparing sale proceeds with cost basis. Both affect performance and NAV, but realized amounts are locked in through a transaction, while unrealized amounts can reverse with market prices. Question 10. How do FX rates impact a multi-currency fund's NAV? This question evaluates your understanding of foreign currency translation, base currency NAV, local currency assets, FX gain and loss, cash balances, income translation, and valuation cutoff risk. Make sure to cover translating local assets and liabilities into base currency, daily FX rates, realized and unrealized FX, foreign cash, income, expenses, and consistency of pricing sources. For a multi-currency fund, local market values must be translated into the fund's base currency using approved FX rates. If a European equity is priced in euros and the fund reports in dollars, both the security price and Euro-USD rate drive NAV. FX also affects foreign cash, receivables, payables, income, and expenses. I would check rate source, valuation cutoff, and large currency moves, because FX errors can create meaningful NAV and performance distortions. Question 11. What are common causes of position reconciliation breaks? The interviewer wants to assess your operational knowledge of security position records, trade lifecycle timing, failed settlements, corporate actions, security master issues, derivatives, and custody versus accounting record differences. In your answer, talk about pending trades, settlement fails, missing bookings, incorrect security identifiers, corporate actions, transfers, share class activity, derivatives lifecycle events, and break aging analysis. Position breaks often come from timing differences, but they can also signal real processing issues. Common causes include trades booked in accounting but not settled at custody, settlement fails, missing trade files, incorrect security identifiers, corporate actions not processed consistently, asset transfers, or derivatives lifecycle events. I would identify whether the break is expected, aged, or material. Then I would trace the event source, correct the record, and escalate if custody or broker action is required. Question 12. How are fund expenses accrued, and why does it matter for NAV? This question evaluates your understanding of accrual accounting, management fees, custody fees, administration fees, audit expenses, daily expense recognition, payables, expense caps, and investor fairness. Be sure to mention daily accruals, known versus estimated expenses, payables, fee rates, expense ratios, waivers or caps, periodic true-ups, and the impact on shareholder-level NAV. Expenses are accrued because the fund should recognize costs as they are incurred, not only when invoices are paid. Management fees, custody fees, administration fees, audit fees, and other operating expenses are usually accrued daily based on approved rates or budgets. When the invoice arrives, the accrual is trued up. This matters because underaccruing overstates NAV and overaccruing understates it, creating unfair allocation between investors entering or leaving the fund. Question 13. What is asset servicing and how is it different from fund accounting? The interviewer is testing whether you understand BNY Mellon's broader business model, including custody operations, corporate actions, income processing, tax services, fund administration, NAV production, and client reporting distinctions. While answering, focus on asset servicing as lifecycle support for held assets, fund accounting as valuation and books of record production, and how both functions depend on accurate data flow. Asset servicing is the operational support around assets after they are purchased: safekeeping, settlement, income collection, tax processing, corporate actions, and reporting. Fund accounting uses much of that data to maintain the fund's books and calculate NAV. The distinction is useful. Asset servicing ensures the securities and cash events are captured correctly, while fund accounting turns those events into valuation, income, expense, and shareholder-level reporting. Question 14. Tell me about a time you found an error or discrepancy. How did you resolve it? This question evaluates behavioral competencies BNY Mellon values: attention to detail, ownership, communication, escalation judgment, documentation discipline, teamwork, and ability to protect clients from operational errors. Make sure to structure your answer using situation, task, action, result. Highlight analysis, root cause, communication, timely escalation, control improvement, and how your action reduced risk. I would answer this with a specific star example. For instance, I noticed a recurring small cash break tied to dividend withholding tax. I traced the ledger entries, compared custodian tax records, and found the accounting template used the gross dividend instead of the net receivable. I escalated, corrected the entries, documented the root cause, and suggested a checklist update. The result was cleaner reconciliations and fewer repeated breaks in later cycles. Question 15. Why do you want to work at BNY Mellon in fund accounting, custody, or asset servicing? The interviewer wants to assess your motivation, knowledge of BNY Mellon's role as a major global custodian, interest in operations and markets, client service mindset, and long-term fit. In your answer, talk about BNY Mellon's scale, global custody platform, exposure to asset managers, fund operations, accuracy, controls, technology, learning curve, and why the role matches your strengths. BNY Mellon appeals to me because it sits at the center of global investment operations. In fund accounting and custody, the work is detailed, deadline-driven, and directly connected to market activity, client reporting, and investor confidence. I like roles where accuracy, controls, and teamwork matter every day. This platform would let me build strong technical knowledge across NAV, reconciliations, corporate actions, and asset servicing, while contributing to a business with real market importance. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.